Good day, and welcome to Q3FY22 Earnings Conference Call of Jubilant Ingrevia Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pavleen Singh Taneja, Associate Director, Investor Relations, Jubilant Ingrevia Limited. Thank you, and over to you, sir.
Good evening, everyone. Thank you for being with us on our Quarter 3 and 9-month FY22 Earnings Conference Call of Jubilant Ingrevia Limited. I would like to remind you that some of the statements made on the call today could be forward-looking in nature, and a detailed disclaimer in this regard has been included in the press release and results presentation that has been shared on our website. On the call today, we have Mr. Shyam Bhartia, Chairman, Mr. Hari Bhartia, Co-Chairman, Mr. Rajesh Srivastava.
The person you are speaking with has put your call on hold. Please.
Mr. Prakash Chandravich, CFO, Jubilant Ingrevia Limited, and Mr. Arvind Chukhani, Group CFO. I now invite Mr. Shyam Bhartia to share his comments. Over to you, sir.
Thank you, Pavleen. Good evening, everyone. Welcome to the Q3 FY22 Earnings Conference Call. We are pleased to announce that in Q3 FY22, we continue to witness significant growth in our revenue and EBITDA. We are also delighted to declare an interim dividend of rupees 2.50 per equity share of rupee 1 each of the company, amounting to rupees 39.8 crore. In our specialty chemical segment, we maintained strong growth across the products, led by growing demand from pharmaceuticals and nutrition customers. In nutrition and health solutions, the demand of vitamin B3 improved, and we placed higher volumes with improved realizations. In life science chemical segment, we continued the strong performance with healthy demand in domestic as well as in EU market. Our business team worked closely with the customers and ensured that most of the increase in input cost is passed on, and our supply chain team ensured
the person you are speaking with
and timely deliveries. We are pleased to inform that in Dow Jones Sustainability Index, Environmental and Social Governance ESG assessment, we scored 81 percentile in the global chemical industry and have been ranked among the top 20 chemical companies globally and amongst the top 3 companies in India. We remain excited with the growth opportunities in our businesses and are fully committed to realize them. Our strong new product pipeline, developed by our in-house R&D, our technical expertise into various chemistry platforms, and long-standing relationship with global pharmaceutical and agrochemical customers is a strong enabler to our growth journey. With our capex plans shaping up, we remain in course of doubling the revenue by FY 2026 from the base of FY21. With this, I now hand over to Rajesh to discuss about the business in detail.
Thank you, Mr. Bhartiya. Very good evening to all of you. At the onset, I hope you all and your loved ones are safe and healthy. I would like to welcome you all for joining us for Q3 FY22 quarterly investor call of Jubilant Ingrevia Limited. It gives me immense pleasure to report a healthy financial and operational performance of Jubilant Ingrevia Limited for the third quarter and 9 months ended 31st December 21. Revenue during the quarter was rupees 1,286 crore, demonstrating a growth of 44% year-on-year, driven by 22% growth in specialty chemicals, 37% nutrition and health solution, and 60% in life science chemical business segments. EBITDA during the quarter was at rupees 222 crore, up 42% year-on-year, led by significant growth in nutrition and health solution business and also by life science chemical business segment. We started the quarter with increase in all the input costs. We have tried our best to ensure that most of the increase in all the input costs are duly passed on through improved price realization of our finished products. We continue our focus on debottlenecking of capacities of existing products to meet increased demand of our existing and new customers. We continue our focus on business excellence for continuous improvement in process and cost using Six Sigma tools and digital interventions. ESG. As briefly highlighted by Mr. Bhartiya in his speech, we at Jubilant Ingrevia are very proud to mention that our continued focus and efforts on sustainability has also been recognized by prestigious global agency, that is S&P Global, for Dow Jones Sustainability in their assessment for ESG, environment, sustainability and governance. We are pleased to mention that we scored 81 percentile in global chemical industry and have been ranked among top 20% chemical companies globally and among the top 3 chemical companies in India in PJSI Environmental, Social and Governance score. We have achieved full score in customer relationship management, environment reporting and social reporting criteria. We also recently received the Economic Times Award for being among top Indian companies for sustainability and CSR. The sustainability is always at the core of our business. Our sustainability journey has started since 2003 onwards as life science ingredient business being part of Jubilant Life Science Limited corporate sustainability reporting. We are also a signatory of the United Nations Global Impact UNGC and has taken SDG Sustainable Development Goals targets for 5 years starting from 2019. To further enhance focus on sustainability and to have increased engagement and involvement of employees, we have undertaken various internal initiatives to enhance socio-economic value for all our stakeholders while minimizing the environmental footprints of our operations. Now let me take you through the updates on all our 3 business segments. Specialty chemicals. Specialty chemicals revenue grew by 22% on year-on-year basis, driven by higher volume across the product segment. We witnessed a strong demand across the end-use segments through pharma sales. Share to total revenue grew to 52% from 47% earlier. We witnessed positive tractions from both domestic as well as international customers. EBITDA increased by 28% on year-on-year basis, and EBITDA margin increased at 21.8% versus 20.8% in Q3 FY21, mainly due to higher volume and improved realization despite higher input costs. We have also seen good traction of demand of existing products as well as new product inquiry from our CDMO customers. Nutrition and health solutions. Nutrition and health solutions revenue grew by 37% year-on-year basis. EBITDA grew by 87% on year-on-year basis, EBITDA margin improved at 24.4% versus 17.9% in Q3 FY21. Margin in the segment was higher on account of higher volume and improved price realization across all products, including niacinamide, as well as in animal health and nutrition business. Animal nutrition business continue making efforts to increase share of specialty premix through various initiatives. In niacinamide, our focus to improve our market share in EU and North America has resulted into enhanced revenue share from both these markets. In Q3 FY22, we achieved 21% share from North America as against 11% last year, and 36% from EU as against 20% last year. Also in niacinamide, our focus on niche segments like food and cosmetics is showing positive results with significant increase in volume in these segments on year-on-year basis. Life science chemicals. We delivered yet another healthy performance in our life science chemical segment with 60% growth in revenue and 48% growth in EBITDA on year-on-year basis, along with the healthy margin of 13.9% during the quarter. Revenue growth in the segment was primarily driven by higher price of ethyl acetate and acetic anhydride. Prices improvement was mainly on account of favorable market conditions. Growth in EBITDA margin also was driven by improved product contribution backed by favorable market conditions. Life science chemical market conditions remained favorable during first half of the quarter, wherein the market conditions started getting normalized during second half of the quarter. Acetic acid prices were highly volatile this quarter on account of supply challenges in China and downstream demand. We maintained domestic market leadership of acetic anhydride and increased market presence in EU, Americas, and rest of the world. Demand of ethyl acetate in EU was strong. Domestic demand also remained encouraging across all major sectors. Our value-added product propionic anhydride witnessed strong demand during the end of the quarter. Growth plans and capex. Our diketene plant is under commissioning now, and we expect to start our commercial production during the current quarter. Our committed growth-related capex investment worth rupees 450 crore is progressing well. At peak capacity, we expect it to generate additional annual revenue of rupees 900 to 1,000 crore at prevailing prices. These capexes are food-grade acetic acid, which is expected to be in operation during the quarter of April to June 2022. CDMO GMP facility at Bharuch is expected to be in operation during the quarter July to September 2022. 3 multi-purpose plants of specialty chemicals expected to be in operation during the quarter July to September 2022. Acetic anhydride plant at Bharuch expected to be in operation during the quarter January to March 2023. Agroactive phase 1 is expected to be in operation during the quarter January to March 2023. Outlook. We expect demand of most of our products to remain strong going forward. With this, I now hand over to Prakash to discuss the financials, please.
Thank you, Rajesh. A very good evening to everyone, and thank you for joining us on Q3 FY22 quarterly earnings conference call. I would like now highlight the company's financial performance during the quarter ended 31st December 21. I would like you to recall that the life science ingredient business of Jubilant Pharmova Limited demerged into Jubilant Ingrevia Limited effective 1st February 21. And in FY21, our results comprise results only for 2 months of operation starting from 1st February 2021. To provide the comprehensive picture of operation of the company on continuing basis, the results for the previous corresponding periods have been presented on pro forma basis in the investor presentation. Previous period financials are derived from the published results relating to discontinued operation of LSI segment of Jubilant Pharmova Limited. The details in this regard are provided in the investor presentation and note of our published results and we request you to go through the same. Revenue from operations during the Q3 FY22 increased to rupees 1,286 crores as compared to rupees 893 crores in Q3 last year, with a growth of 44% on YOY basis. Similarly, revenue from operations during the 9 months FY22 was at rupees 3,654 crores as compared with 2,413 crores in 9 months last year, witnessing a growth of 51%. The EBITDA during the quarter increased to 2,222 crores as compared with rupees 157 crores in Q3 FY21, with a growth of 42% on year-on-year basis. The margin stood at 17.3% in Q3 FY22 against 17.5% in Q3 FY21. Similarly, EBITDA for 9 months FY22 was at 712 crores as compared with rupees 424 crores during the 9 months FY21, having a growth of 68% as compared to the same period last year. EBITDA margin were at 19.5% during the 9 months FY22 as compared to 17.6% during the 9 months FY21, a growth of 191 basis points as compared to the same period last year. Depreciation and amortization expenses during the quarter was at 30 crores. Finance cost during the quarter was significantly lower at 5 crores versus 13 crores in Q3 FY21, a reduction of 63% YOY on account of repayment of debts as well as lower interest rate. The tax expense for Q3 FY22 was higher at 58 crores on account of higher profit. The cash tax is expected to remain 17.5% during FY22. Profit after tax during the quarter was at 129 crores as against rupees 91 crores in Q3 FY21, witnessing a growth of 42% YOY basis. Similarly, PAT for 9 months FY22 was at 408 crores as against rupees 221 crores in 9 months, a growth of 85% as compared to the same period last year. The gross debt was reduced to 264 crores during the 9 months FY22. The gross debt as on 31st December 21 stood at 284 crores as against 548 crores as on 31st March 21. Similarly, company's net debt stood at 230 crores as on 31st December 21, a reduction of 201 crores from 31st March 21. The net debt to EBITDA ratio further improved to 0.24 times from the earlier level of 0.69 times as on 31st March 21 on the basis of trailing 12 months EBITDA. The blended interest rate for Q3 was 5.25% as against 7.01% in Q4 FY21. The net working capital percentage to turnover and number of days of working capital on the basis of Q3 FY22 annualized turnover were at 16.5% and 60 days respectively. The increase in net working capital was primarily driven by higher raw material cost and higher sales price, leading to higher value of inventory and debtors, and meat process buy of ethanol due to higher import prices. The capital expenditure during the year is expected to be around 300 crore. With this, I would like to conclude our opening remarks. We will now be happy to address any questions that you may have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Siddharth from Equirus. Please go ahead.
Oh, hello. Yeah, could you just highlight the impact of the removal of import duty on acetic acid and methanol for Jubilant Ingrevia and the industry?
So in methanol, as you know, the duty has gone down from 5% to 2.5%, and acetic acid, the duty has gone down from 7.5% to 5%. Now, this will have impact on our domestic sales, mainly on methanol, because in acetic acid, as we have been saying, that most of this prices or duty which goes down, there will be less impact because it will be passed on to customers.
Okay, got it. So, and secondly, in the nutrition segment, the entire growth improvement in margins that we have seen in this quarter versus last quarter, was it mainly because of the realization growth, or there were some other factors that was driving this?
No, there are two reasons. One is that the price realization was better, and also the volumes were better in the quarter.
So could you give us a sense of the capacity utilization in the nutrition segment in terms of how it has moved over the last 2 quarters?
So capacity utilization in nutrition segment, as we explained last year, we had capacity utilization of almost 70%. Now, in this quarter, that last quarter, quarter 3, we have utilized to the tune of 82%.
Okay, so got it. Thanks a lot.
Thank you. The next question is from the line of Kaustav Bubna from Rare Enterprises. Please go ahead.
Yeah, hi. Can you hear me?
Yes.
Yes.
Just wanted to understand how sustainable are these realization increases in the nutrition segment, and could you just speak a little bit about that?
So the price increase in nutrition segment was mainly on 2 reasons. One is the raw material prices which have gone up. Secondly, obviously, we have been talking about that nutrition prices in the earlier quarters were lower. So now they are normalizing. So the prices which we are now getting in Q3, what we got in Q3, are very much sustainable. So there is no challenge in these prices.
Okay, great. And just wanted to get an update on the supply situation on global acetic acid plants. Now with this third wave of COVID, has there been further supply disruptions, or how do you see the price of this commodity moving now?
Specifically on acetic acid, as you may have noticed that the supply situations have been better during the end of the quarter. And that is the reason you could see that the prices are getting softer now, acetic acid. So supply situation of acetic acid is not a challenge. In fact, there is a capacity which has started in China which was not running for a long time. So that is releasing some pressure on acetic acid availability. So that's not a challenge. The availability of acetic acid is not a challenge anymore.
Okay, so this capacity which was going to start in China has started, and this third wave hasn't impacted that basically?
No, third wave actually has not impacted any business. Okay. I don't think the only challenge people have faced is on logistics. Because of third wave, there has been stronger control operated by the governments in different countries on import consignments. That has put pressure on logistics. Okay. That could have made some impact on delays in material, but demand side there was hardly any impact on demand side for any of our products.
Great. Thank you so much.
Thank you. The next question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi, sir. So just a question on the nutrition side. We got good volumes in the European and the North American region. So do you think it's more like a one-off where suppliers were not able to manage the supply chain and were not able to reach the clients, and we were able to do it? Or is it more like a sustainable long-term relationship with the client that helped us?
So the volume increase which we have got is not for that we have got some market which we is not serviced by competitors. Actually, this is the long working which we are doing for the niche segment and for our existing customers going to new markets, and that is actually letting us have more volume. In fact, we have plans to go further volume in niacinamide and niacin because this is the product where we have global leadership both on cost and availability. So obviously, volume increase is on our target, and quarter on quarter we target to increase volume.
Right. Fair point. Sir, and just to understand, in terms of the import duty reduction for the China capacity coming in, even the end prices of ethyl acetate or acetic anhydride will come down, right? So spreads will broadly remain the same, right?
So that is why I said that there will not be much impact or not too much positive scenario with respect to this duty down. But yes, it will make us more competitive as against imports, isn't it? So that will make definitely a better situation of realization for us. So there will be a positive impact. I'm not saying, but not everything will be passed on, or we will be saving the money on that. But there will be a positive impact. Yeah.
Right. Fair point. Sir, in this diketene plant, which is about to commission now in this quarter,
yeah,
will we have to sell it to like a similar client profile which are already existing, or is it going to be new clientele completely?
So as I have been saying this for many calls now, that as you know, in India, the demand is already very high, and customers are currently importing. So for us, it's not difficult to get the business of diketene products. So basically, customers are waiting for the plant to start, and we have some waiting orders to be serviced. So selling this kind of volume, which we are having in phase 1, is not at all a challenge.
Sir, and how much have you spent for diketene plant?
How much we have spent? We can't give you specific numbers because, remember, this is not something which we have built from a very, very green field. We have our own infrastructure, utility. This plant has been built in our Gajarola facility, so it's very, very difficult to give you a specific number of investment fees.
Sure. Fine, sir. Yeah. That's helpful, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ranveer Singh from Sunidhi Securities and Finance. Please go ahead.
Yeah, thanks for taking my question. Sir, on CapEx side, that I think going forward every quarter we have one facility getting operational. So just if you could give a breakup of CapEx among that 4 or 5 projects we have.
I think it is given in my speech also. You have in presentation also. So you want the CapEx value divided into these projects?
Yes. So 450 crore CapEx.
That again, I mean, that is something which is difficult to give at this point of time. I mean, so what we can only tell you is these 5 CapExes we have approved, which is of the value of about 450 crore. And as we said, the one is coming in the quarter 1 of next year, and 2 will be coming in the quarter 2, and 2 will be in the quarter 1 of next year. So basically, this specific number on CapEx will be difficult to be given.
No, just wanted to understand which of these facilities is actually bigger one. So that because all facility obviously what I assume would not be an equal, will not require equal quantum. If you could just give that which one is a bigger one, so that that will give some perspective to what going forward that may happen.
So what I can tell you roughly that all the CapExes which are being coming in the next year, they are going to generate a revenue of 900 to 1,000 crore. So again, it will be difficult to give you the numbers that how much CDMO will bring and how much food SDKs will bring.
Okay, fine. And again on nutrition business, I think you answered some queries that volume is also likely to again see, so uptick will continue. So again, we need to do capex for this facility because at 85% capacity utilization we are, reaching to. Yeah.
Yes. So you are right. We have done the debottlenecking last year. We are doing a debottlenecking again in a couple of quarters for this plant. And we have announced in our investor presentation that we are further going to expand capacity of our vitamin B3. If you go through our investor presentation, we have already announced. So you are very right. We have to increase capacity going forward. We have been doing it continuously. So right from the day we started, we continuously increasing capacity by debottlenecking and adding the capacity in last 2-3 years. And we have plans to further add capacity in next 1 year, and then again in the next second year. So this is a continuous exercise which we keep doing based on the demand which we see going up.
Okay. And lastly, so for a full year, can we expect similar kind of EBITDA margin for a full year, what we have achieved in 9 months?
See, this is something which is becoming, we become little nervous to commit that, because committing margin becomes very difficult. So what we can only tell you, the demand is stable. We are seeing strong demand. Pricing, we don't see any challenge right now. The availability is not an issue. So I don't see there is a challenge in vitamin business growth. Only thing is difficult to give you a scenario or a commitment on margin side.
Okay. Okay. Thanks a lot and all the best, sir.
Thank you very much.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss Financial Service. Please go ahead.
Yeah, hi sir. Good evening, sir.
Good evening, Rohan.
Sir, a couple of questions. The first is on this commissioning of decketing plant, which we are planning to commission the current quarter. How has been the customer response in terms of product development? We must have got some products approved from them. So I also wanted to know how fast we can escalate this plant in terms of utilization level going forward.
So as I have mentioned earlier also, this phase 1, as you know, we are building up 6,000 ton capacity. It should be ready very soon. And we are very confident that in the fastest period of time, we should be in a position to sell the volume.
So the product approvals and everything are in place, and maybe that 6,000 tons gives roughly close to 300 crore rupees to 350 crore rupees kind of revenue potential, in my guess. Can we achieve it by end of FY23, sir?
I don't know where do you get this 300 crore rupees revenue, but I can only tell you 6,000 ton we will be in a position to sell within a year's time, definitely.
Okay. Sir, second question is on this life sciences business. So I understand the current quarter spreads have been better in acetic anhydride and ethyl acetate, both on Q-on-Q basis. While the raw material acetic acid prices were stable, but we have seen some improvement in end product prices, but that is not getting reflected in the profitability from life sciences. So is that the benefit have yet to come, or despite the spread being better in Q3, is any particular reason that why it's not reflecting in the current quarter?
I don't understand what is the meaning of spread you are saying, because in Q3 we are in a position to get volumes both in ethyl acetate and anhydride, and also the prices have been better. So I don't know what you are highlighting. Can you please clarify what you are asking?
Sir, in Q3 we have seen that the acetic acid, which is a key raw material, the prices of that was a similar level what it was in Q2, while ethyl acetate and acetic anhydride prices have gone up in Q3. Even when we during our Q2 Concall, we were highlighting that probably the life sciences business profitability is likely to improve, or the margins will improve going forward. But in terms of absolute number, the current quarter, it's similar to what we had in Q2. So just wanted to understand that any particular reason that why this business, life sciences business profitability has been remained at the same level as it was in Q2.
Okay, understood. So basically what you are saying is right. Acetic acid more or less was same, not same. It was little lower than Q2 on an average basis, because it started with a high price in the quarter beginning, but later it went down. So it was little lower price. Now, during the quarter, the prices of ethyl acetate and anhydride was normal. It was not very high in the quarter 3. In quarter 2, also it was the normal price. Quarter 1, you are right, there was some positive impact on prices because of market condition. So quarter 3 was more or less normal demand, except for ethyl acetate. We had some good pricing in export market. So I don't think we were expecting very high prices during the quarter 3. We had expected the similar prices, and we achieved that.
Okay. Sir, next question is once again going back on the previous question. Sir, you mentioned that 250 to 300 crore is a full revenue potential from nicotine at 6,000 tons is probably not the right estimates which I have. Sir, can you just share that at a full utilization of the 6,000 tons phase 1 plant in nicotine? What can the new potential one can expect from that, sir?
Yeah. So what we had said earlier that our both phase 1, phase 2 of diketene should give us the revenue of close to 300 crore. You are right. But that is phase 1 and phase 2. So phase 1 is 6,000 crore. Phase 2 will be additional 2,000 crore, which is value added product further, right? So that is the value addition which we will bring in phase 2. So that's the total you are talking, not in phase 1.
Okay. So large part of the revenue being in a value added or probably margin accretive, phase 2 will be more profitable than phase 1.
I would say that not large part, more or less equal revenue from both, because there the volumes are less but the value is high. Here the volumes are large, value will be lower. So more or less it will be equal bifurcation, right, in terms of revenue. But in terms of course, the profitability, value added should give better profitability.
Great, sir. Sir, we almost achieving almost a debt-free balance sheet by end of this year. You already repaid a substantial part of large debt, long-term debt in the current quarter. And with a solid cash flow generation and probably our capex will be short of the cash flows which will be generating. Sir, any thought process further on terms of capex plan or increasing this current capex guidance because of the cash flow generation will be pretty healthy?
Yeah. So in the last call also we have mentioned that we have a very strong pipeline of almost 34 products, new products, which we are planning to launch in next 3 to 5 years. So we are in the process of going through our long-term planning during this month, in the month of February. And post that, maybe sometime in the next call, we will see if we have to make some additional announcement of further capexes for those new products to be launched. So I think we will come back soon on the future investment plan. You are right.
Sir, thank you. Sir, thank you very much.
Thank you.
Thank you. The next question is from the line of Sunil Kothari from Unique Portfolio Management Service. Please go ahead.
Thank you. Thanks for the opportunity. Congratulations, sir, for good numbers. Sir, my question is, I would like to understand from you is compared to say last 1, 2 or 3 years, the way opportunity is opening up for people like you who is having a very long-term experience of this field, having all across the globe, having a very major customer clients, long-term relationships, and the way we are investing. Do you think that this opportunity is increasingly becoming a very possible and feasible to grow faster, and you may be growing faster than what you are thinking or whatever your objective is? Would you like to say something on opportunity available, China Plus One strategy, import substitution from 2-3 years point of view?
In nutshell, I would say you are right that our opportunity of growth is tremendous. And the positive part is that we are ready with the new product pipeline and our very strong financial position. Now, these two things gives us an edge over anybody else to make the future investment and growth plans very positively. And you are very right that our growth could be faster than what we have envisaged and also given the announcement.
Great, sir. And sir, my second question is looking at our every new project. I think we continuously talking about integration, backward integration, and then value addition. So would you like to comment on the possibility of EBITDA margin which is sustainable, not this like life science segment, sometimes 20%, sometimes 14%, but as a company as a whole, this 20% plus minus EBITDA margin over a year or two or maybe three is as a base limit one should understand, or there is a possibility of crossing that numbers is also there?
If you see our spread of revenue, I think the current revenue is spread mostly is coming, 55% comes from life science chemical.
Yes.
And 45 comes from nutrition and specialty chemical. Going forward, after 1 year, or let's say during this next 1 year when these capexes will start coming up, most of our new products will be added up with the specialty chemical and higher value added products.
Mm-hmm.
So obviously our revenue product mix will change. And the moment revenue product mix changes towards higher revenue percentage on specialty and nutrition, you are absolutely right. Our margins should start firming up, and we should be in a position to deliver a consistent margin 20 plus, which you are expecting for.
Great,
but
sir. And
obviously all this will happen based on all the new capexes, and they will start coming, we'll start selling. So we are expecting the same thing. Even in the last couple of calls, we have mentioned the same thing, that most of the new capexes are on value added. They are going to give us better margins. So obviously our overall margin situation will be little bit, safeguarded in terms of fluctuations in life science chemicals.
True, sir. Sir, my last question is looking at the opportunity and the preparedness we are already having. Which are the major challenges, or which are the major area on which you as a top manager focus on and want to overcome, and which are the area which you would think that we can further improve upon internally?
So number one is the efficiency, continuous improvement on efficiency. Number two, ensure that all the new projects comes on time. Number three, make sure that your people's pipeline is well built and you ensure your top performer and all the critical people are there with you. And obviously your relationship with customer and market reach. All these three, four things which are our top focus should give us the growth opportunity which we are talking.
Great, sir. Wish you all the best and congratulations again.
Thank you.
Thank you. The next question is from the line of Malaya Samir from Breakthrough in Stock. Please go ahead.
Congratulations, Mr. Srivastav,
Thank you.
for having a superb 9-month period in FY22. Congratulations to the management team, and I would also like to thank you for being very transparent in giving the details for margins and revenue and guidance for all your 3 segments. My question here is something to do with macro. Assume that FY22 was a very strong year for us. One, because we've moved forward in terms of making superior products, and secondly because the supply from the Chinese market was restricted. Now, if I were to look at future on a very high base that we are expected to be doing in FY22, do you have, number one, any guidance for us as to the kind of growth, in all the 3 segments put together that you would do in FY23 onwards? That's the first question. And the second question I would have is, if I were to play a devil's advocate and see that some of the capacities which were restricted in China in FY22, if they were to be getting released in FY23, then what is the plan B for the company to defend its margins? And when I talk of margins, I don't talk of margins in percentage, but margins in absolute terms.
Okay, so it's a very lengthy question, but what I've understood, let me try to answer your question. First of all, be very clear that FY22 though was a very difficult year for Chinese, but if you look at our product segment, it is not that we have got something very positive because of China impact. What we are definitely getting positive because of China impact is for the future, not for the current. So all future projects which are coming up now are actually towards positive for us. So to say that FY22 was the best and future will not be the better, I don't buy that, particularly for our kind of product. Because in our case, we are going to see better futures because all the new products we are talking, the demand will be better. The competition from China, we are trying to see that should not be as high as we have been facing earlier because now the customers are also positive towards sourcing from India. So I think the future is going to be better than FY22. I don't see there is any challenge there. Hope I have answered your question.
Yeah. That's a very big comfort. Thank you very much, sir.
Yeah. Thank you.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permit, please come back in the question queue for a follow-up question. The next question is from Lano Shuri Devra from Paladin Capital. Please go ahead.
Hi, good afternoon. Just wanted to ask if you can share volume data for each of the segments.
You are asking volume growth or you are asking
volume data, like volume sold.
Volume sold is very difficult to give you product-wise.
You can give it segment-wise, you can lump it up together so then we can figure out average realizations and average margins and so on.
I think it would be good if we can talk separately. We can give you some indication of volume. Is it okay?
Okay, sure. Thank you.
We don't have that exactly number what you're talking.
Okay, no problem. Thank you.
Yeah. Thank you.
Thank you. The next question is from the line of Prakash Kapadia from Manvit Portfolio Management Service. Please go ahead.
Yeah, thanks for the opportunity. I had a couple of questions. Given what we are witnessing as demand currently, and what we are working in terms of new product pipeline, and given the cash flows what we are generating, isn't there a possibility and a probability to double our revenues much faster than FY26? Because we can do incremental capex, we can cross sell to some of our existing customers. So some thoughts on that. And secondly, for us, what kind of asset turn range should we look at? Obviously, it's a function of end product prices also. So is 2 the right range, 2.5 the upper range? If you could comment on that, that'll be helpful.
So first question. If you see our statement, we say we want to double the revenue from the base of FY21. Now, we didn't know that the raw material prices will go up so sharply, right? Now, if the raw material prices remains at the level they are today, you are right that our revenue double can happen faster than what we have committed. So that's the number one. Number two, I think the question you have asked on can you repeat the question number 2, please?
Yeah. From an asset turn perspective.
Yeah, asset turn, we have said earlier also that most of our products which we are talking are specialty and nutrition in the new plant and new investment. We will be close to 2 asset turn, which we have said earlier.
Okay. 2 seems a benchmark. And if the demand scenario continues of what we are seeing currently, and the end product prices remain, is it fair to say 25 we could double revenues on the current capacity?
So you want my commitment, but I can only.
No, I'm looking at the direction. I'm just trying to understand.
Yeah, direction I have said to you that since the prices are higher, we don't know what is going to happen to the prices of raw material. But if they remain as of today, I said earlier, we should be faster than we have committed.
And
I already said it.
And also, the new product pipeline or, incremental capex. So today, obviously, we are planning based on a certain capacity demand scenario and a certain capex. Given the cash flows which we'll generate, incremental capex can lead to faster revenues is what I was trying to understand.
You are very right. What we are going to do is that when we do our long-term exercise this month, we will also review that and come back to you with a clear statement with both new investment plan as well as our revised estimate of revenue growth. We will come back to you.
Sure, that'll be very helpful. And as I see the PPT, we've declared a interim dividend. So if you could comment on a dividend payout policy.
Prakash?
Yeah. So our dividend payout policy, Prakash, it's already given also on our website. Broadly, if you would see that we consider both external factors as well as the internal factors in a dividend. So on the internal factors, we see that what are the growth projects that are going, what is the cash flow situation, and on the external factors, we see the overall environment. And having said that, we also look at a certain part of our profits which needs to get distributed. So based on all these factors, the distribution of dividend decision has been taken. And since we had a good year this year, we were generating good profits. So therefore, the board has kindly approved an interim dividend.
Okay. So is it like minimum 30% of PAT post capex or 40%? Is there some range which we can?
So as a range, I am not committing you as a number, but if you see our history of our erstwhile Jubilant Life Science and currently what we are doing as an Ingrevia, you will definitely find a pattern.
Okay, fine. Understood. That is helpful. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Alicia from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my question. So just wanted to understand, firstly, with respect to your specialty chemical business, can you explain the reason for the growth on Q-on-Q basis from last quarter to this quarter?
So one is that some of the product demand has increased, and we have done some debottlenecking of capacity, and our existing products volume requirement also have increased. And the third is the pricing, which has been better. So these are the three key reasons for our growth in specialty chemicals.
Sure. And so the next question is across segments. Is it possible for you to share the volume and the realization growth?
We don't have number, and so maybe as we said earlier, we can talk separately. We can give you some indications.
Sure. And so just one last question. What I understand from the presentation is that phase 2 of diketene is expected by end of 24, whereas phase 1 is expected to be utilized in 23. Why such a large gap in on streaming the second phase when we know that the earlier capacity may just be utilized much sooner?
No, I don't think we have said phase 2 will come end of 24. We said once we start phase 1, we will immediately commit phase 2. So I don't think we have said it will take 2 years. So we will, as soon as we start phase 1, within few months, we will commit phase 2. And we should be ready in 3 to 4 quarters of the committee.
It is mentioned on slide 32 of your presentation, and hence the question, but...
So we will check that. Maybe some typo error there. We will check that.
Okay, thank you.
Thank you. The next question is from the line of Pritesh Vora from Mission Holdings. Please go ahead.
Thank you for the opportunity as provided. My question is more of a larger question, sir. That, considering China plus one strategy whenever we talked about any chemical company. So are we specializing a particular chemistry or a process for our growth? We have seen numerous industries and numerous companies specializing one line of chemicals, and they've grown back of that. So what is our overall strategy to grow our business?
So, Pritesh, if you have followed us, we have very strong platform chemistry where we have been working for last 40-45 years. Let me take you through some of them. So we are one of the very large producers of acetic anhydride, which is a green raw material based product, and we are globally number 2 Now, here we have been working for 45 years in this chemistry platform, and we have become number 2 in the world. Now, we are also having other products like pyridine derivative. We have almost 35 pyridine derivatives which we are selling to global market. So all these products are very niche, which we have been selling for last 40-45 years in the global market. And we have been adding chemistry platform year after year. And some of these chemistry platforms or the technology which we are using to produce our products are very niche. They are not done by many companies in the world. So whether it is pyridine derivatives, whether it is an acetic anhydride chemistry, hardly 3-4 companies are there in the world. And like vitamin B3, we are number 2 in the world, and there are hardly 4 or 5 producers in the world. So we are not a company which are going to get the growth with China Plus because of some new inquiries coming from customers. We have our own strong product platform based on our own developed technologies, and we are the global cost position and integration. And with that, we have been growing continuously for many years, and we have plans to grow in future. So it is not just China Plus looking at the new inquiries from customer and then look for the growth. We have a very set plan. I have stated earlier also in the call, we have new products pipeline which we have been working for many years using various technologies and chemistries which are required by global customers and not done by many companies in the world.
So I fully understand, sir, and we are investors in your company, so I fully understand. My question was the larger point of view, that why can't we just go after this opportunity, say Diketene family or something like that? Why we wait for further? Why can't we specialize and go after some selected molecules and increase our business over a period of time?
So we are doing that. But please appreciate that putting up the facility takes a little bit of time. And also, it's easy to say that we want to go after this, but then put up the capacity, make a quality product, sell it to the customers in a satisfactory way. It takes a little bit of time. But as we have demonstrated in the past, that wherever we enter in the product, we will take global positions very fast. So as far as speed is concerned, you don't have to get worried. We will catch up the speed as soon as we feel confidence in that product. We will move fast. Fastest we will move. You're very right. So not that we are waiting for something. As soon as we will launch, we will go after the volumes. That's not a problem.
All right, sir. Wish you all the best. Thank you.
Thank you.
Thank you very much. And I'll hand the conference over to the management for closing comments.
We thank you all for.
If you have any further questions, both Rajesh and Prakash will be happy to take it forward.
Thank you.
Thank you.
Thank you very much. On behalf of Jubilant Ingrevia Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.